Welcome to McMaster University's Convocation Hall, which is located on the traditional territories of the Mississauga and Haudenosaunee nations, and within the lands protected by the Dish with One Spoon Wampum Agreement. I'm Stefan Scarafa. I am a philosophy professor here at McMaster University. I'm also the chair of the department. Before I introduce Dr. Blyth, just let me mention a few words. The first thing I'd like to say is that this event wouldn't have been possible without the generous support of the Socrates Project. The Socrates Project is an ambitious two-year pilot that addresses the urgent need for universities to reclaim and reinforce the fundamental values of thoughtful academic inquiry, critical thought, informed debate, and human expression. The Socrates Project combines a range of complementary initiatives that engage the internal and external communities, supports and promotes interdisciplinary collaboration and partnership, raises the profile of the liberal arts, promotes vibrant and robust, high-quality academic discourse, and nurtures critical thought, discernment, and carefully reasoned judgment. One thing I should mention is the last event of the season for the Socrates Project will be next Thursday, July 4th, the Statute Wars. If this sounds interesting, you might check out the website, socrates.mcmaster.ca. Just two more things before I introduce Dr. Blyth. I will be quick. Let me just mention that this event is actually part of a larger event. If you're interested in the talk this evening, you might be interested in the larger event that went hand in hand with this event. It was a summer school in capitalism, democratic solidarity, and institutional design. You can check this out at www.solidaritydesign2019.com. There will be a number of talks that will be on the website and the Q&As to the talks, and this website will be curated with supplementary readings, that kind of thing, if you want to learn more about the kinds of things we're going to talk about today. Just a bit of housekeeping. The format for the day will be about a 45-minute talk, and then we will open things up for a Q&A with the audience at large. At one point, we had envisioned having a small panel of interlocutors. One of the panel members was not, at the last moment, was not able to come into town today, and then we thought, they don't want to listen to us. They want to hear Blyth anyway. So let's just give him a little bit more time to talk, and then you can have a little bit more time to ask questions of him. Okay, now let me just introduce Dr. Blyth. He is a political science professor at Brown University. He works with the Watson Institute there. He specializes in international political economy. He's written many articles and books. These books include Great Transformations, Austerity, The History of a Dangerous Idea, and The Future of the Euro. He has, I think as many as you folks will know, he has an active social media presence. He is also well known for accurately predicting Trump's election and the Brexit referendum outcome. But I think more important than that, he's well known for having a plausible and very interesting account of the mechanisms that are driving these kinds of events across the world. And he's going to come talk to us today to share what he has to say about that with you. Okay, that's it from me. The only thing I'll do after that is moderate the Q&A. Let's bring out Dr. Blyth.
Thank you, Stefan. So I have my Madonna mic. Can you hear me? Ah, there we go. It's good. Hello, and thank you for coming out. This is a beautiful, warm summer's evening in Canada. You don't get many of those. So I'm deeply grateful that you're giving it up to come and listen to me, particularly when you can get most of this on YouTube. I'm Scottish, as you know. In Canada, you're like, duh, so what? We're drowning in Scottish people. Half of you are probably Scots descent. I live in the United States, where they go, what's he saying? I was a bit Trump, actually. What's he saying? What's he saying? And usually what they say is, I sound like Shrek. And so being in Canada, of course, is hilarious because that's Mike Myers, right? Who's out of the Ottawa Valley, I think he comes from, and his parents are from Glasgow, which is why he can do that totally authentic Scottish accent. So in tribute to Mike Myers, I'd like to begin by saying this: donkey. So there we go. That's out of the way. So I just realized if I stand here, you won't see any of the slides. So that's kind of stupid. I'll come over here. There we go. I hate standing at podia like that because I always want to stand there and go, dearly beloved. In this shining example of the paintings up here, it proves that until very recently we didn't give a damn about diversity. It's like a monument to whiteness. It's like, anyway, they didn't tell you this. I used to be a comedian. You'd never know. All right, so let's get started. Global Trumpism. Where did that come from? Oh, I have to do this. I have to get there. Is it going to work? Yeah. Yes, there it is. Ah, damn, it's going too far. Come back, come back. Oh, this is going to be fun. Don't. All right, there. So I wrote a piece in Foreign Affairs that coined the term. And this was sort of the tagline of it. The era of neoliberalism is over. The era of neo-nationalism has just begun. And then, of course, everyone on Twitter goes, no, that's not right. And here's why. My statistics tell me something else. And I was like, so here's my in slides. So yeah, if I do this, can you just click it? That's so much better, thank you. All right, so anyway, here's the rogues gallery, as you can probably see. You know who this lad is? Looks familiar? He's the Mr. Bean of Ukraine. Right? So he's the comedian who won the election in Ukraine. Now, people are like, oh my God, a comedian, right? But they forgot that Italy is run by the Cinque Stelle, the 5-star, and that was founded by Beppe Grillo, who was a comedian. And then there's a guy called Martin something or other who runs Slovenia, who's also a comedian. So basically 3 parts of Europe, broadly construed, are now run by comedians. Anyone know who this is? The crappiest James Bond villain picture in all time with a cat. That's the guy that's up there in the Netherlands. Pim Fortuyn. Islamophobe, of course, up here. Exactly, the Le Pen family business. And then down here, Bolsonaro, exactly. A guy who my favorite Bolsonaro quote is, there's 100,000 people I'd like to kill. I'm like, only 100,000? That's nice of you. And then, of course, this is the exit poll at 6 p.m. on the night of the election. So we went to bed with, I'm married to a German, I would need to be. And my wife said to me, you really are sure he's going to win, aren't you? And I went, oh yeah. So she could barely sleep. And then she woke up at like 6 in the morning and checked the phone. And she punched me. That's how I woke up that day. She went, poof. This is great. We've got a team going on. All right, so where did this eruption come from? Here we go. You have to pay attention, though, because sometimes these things move quick. So there's lots of ways of explaining this, and I found the most effective way to do it is to talk about computers. So here's how this works. There's lots of different laptops in the world. And if I drop them all on the floor, they all look kind of the same. So they all have memory, they all have a motherboard, they all have a central processor, they all have these same bits. But they're all slightly different. So the hardware is configured from the same stuff, but it's put together in different ways. Guess what? So are capitalist economies, right? So the Canadian economy is like the American economy, only it's not, right? Or if you do a bigger contrast, Germany has a capital market, but 50% of all their firms never go near a stock market. They don't issue shares, they don't list. They're totally different beasts. The American stock market is absolutely enormous. Its main function is so that people can do what are called IPOs, whereby they lie to investors and steal money. Nobody actually uses it for investment. That's a huge lie, right? But anyway, the point is, they're different. The labor market of Germany is very different from the labor market of the United Kingdom, whatever. But they're all of a kind, right? You recognize them, but they're all different. So it's a bit like Apple versus Acer versus this, that, and the next thing. So the other part of it are the ideas. So when we think about economic ideas, whether those are Keynesian economics or classical economics or whatever these things are, they're a bit like the software that runs the hardware. And that means there are compatibility issues. You can't run American libertarian ideas on Swedish social democratic hardware. It's just not going to work. Hence why the contest over economic ideas is ultimately a political contest, right? So you're trying to run different types of ideas on different types of computers. And at certain points in history, you get a kind of homology. That is to say, a certain set of software, everybody runs a kind of the same version, and the hardware looks broadly similar. Now, the story I'm going to tell you is the following. What happens is, each time you do that, it works for about 30 years. And then there's a bug in the software. And that bug in the software gets bigger and bigger and bigger until the system crashes. Then when the system crashes, if you're smart about it, you do a hardware modification and you rewrite the software, and then it runs again for about 30 years. And then there's more bugs, but they're different bugs in the software. And then they go, pfft, and it does it again, right? That's what capitalist economies do, regardless of the type of them. So we're good with this? Right. Nah, back one. No. Oh, I'm actually in control. I will not move. You were doing it together there, wouldn't it? All right, so here we go. So if you come out of the Cold War, not the Cold War, you go into the Cold War, basically. If you come out of the Great Depression and World War II, what was the one thing that every government that wasn't in the communist bloc had to do? And that was full employment. Because you'd went through a whole generation of joblessness. There were no welfare states at that time to soak up the damage. And what that led to was a great deal of desperation. And what that meant was fascism and communism, and it nearly destroyed capitalism. So even though the elites that were intact in the investor classes in these countries would have loved to have gone back to the old laissez-faire ways, they knew they couldn't. So you have to manufacture one thing, full employment. Now, how do you do that? Well, there's loads of different ways. And if you've got different hardware, you have to do it in different ways. But pretty much every country decided we're going to have a national economy. We might even nationalize some of the commanding heights so that we've got real control levers we can pull. The one thing we're going to do is we're going to make sure that finance stays at home. Right? You can't just move your money abroad. Very hard to do that because we want our investor class to invest at home. And when you force that high rate of investment, what happens? Well, you're going to get high wage growth, and that's great because that gives people money to spend. Now, the only way you can do that and can maintain that is if you increase productivity to pay for the wages. But how do you get both sides to agree to that? Well, you have things like cost of living contracts, or what the Germans called corporatism, where big labor is recognized by big business and they negotiate over productivity and pay. And that was the standard setup right across the world from the 50s through the 70s. The result of that is a system of very high taxes and transfers. In the United States in 1957, the top marginal rate of income tax was 91%. Yeah, AOC suddenly looks like a conservative. But here's the difference. Nobody paid that rate. Hardly anyone, maybe the head of GM. Because what happened as a result of this was what's called the Great Compression. The top end of the income distribution went down, the bottom end went up, and the whole thing moved up at once. That was the birth of the middle classes. So the middle paid 90% of the taxes, hence nobody paid 91% and nobody paid nothing, and everybody paid 35%, right? What that meant was, over time, labor's share of national income, you think of national income as a big pie of 100%, they got more of it, and business got less. And the interesting thing was, nobody knew the name of the person who ran the central bank. They were completely unimportant. Now run forward, right, to just 10 years after that comes to an end in 1980. What happens? The neoliberal order, price stability. That's the one thing we need to have. Suddenly the commitment to full employment's gone. In the famous words of the British minister Norman Tebbit, unemployment's your problem, not the government's problem. Get on your bike. Globalization, all of a sudden, no more national economies. It's good to be global. We're going to be integrated. We're going to have supply chains, and we're going to trade with each other. Open financial markets, capital free to go anywhere to find its highest return. No obligation to invest at home. You have a global responsibility to your shareholders, not to your citizens. flexible labor markets. No more unions, no more negotiations. You find your price in the market and be happy about it. As a result, much lower taxes and transfers. Capital's share of national income becomes very high. This is the inequality of the moment. And labor's hits an all-time low. Both capitalisms configured in different ways with different ideas. Yes, there we go. So what was the bug in the first one? Well, many of us might be old enough to remember. Whoops, it went back. God damn it, can we go back one? Thank you. No! Technology. You might remember this. It was inflation. And the reason it happened was very simple. And it actually wasn't the story they told us, like the state spent too much, the same as they did after the financial crisis. That's always been horseshit. What actually happened was this. Imagine that you have a commitment to run in full employment for 30 years. What that means is, by definition, the median wage has to go up. Now, you can pay for that if you're a business if you can keep productivity ahead of pay. But eventually, you kind of hit a technological wall, and you keep asking for more pay. And what that also means is the bottom end of the income distribution goes with it. So what that means is your median worker's getting paid more. If you want to get skilled workers, you need to pay through the roof. And the dumbest people you've ever met can leave their jobs at noon and get a new one at 4 at a higher wage. That's kind of unsustainable, because the only way businesses can cope with this is by passing it on in prices. So then Labour, which is big and organised, says, you promised me 4%, but now there's 5% inflation, so I've just had a pay cut. So I'm going to go on strike. Remember all those strikes in the 70s? And then business said, no, you won't. And they went, yes, we will. So they did. They had a strike. And then business eventually said, all right, have 7%. And then inflation went to 8%. So Labour came back and said, I just had a pay cut. And thus it spiraled out of control. And that was the bug in the software. Now, that bug was diagnosed by a software engineer, which we call economists, called Mikhail Kalecki back in 1943. And he predicted in an article, which I'll be happy to send any of you if you send me an email or you get it off my website, from Political Quarterly, all words, no math, in 1943. And he says this whole thing's going to blow up because it destroys management's right to manage. It's going to create inflation through the wage channel. And ultimately what it does is it makes capitalists really upset. Because if you've planned to invest over a 10-year period and get a 5% real rate of return, if inflation goes to 10%, you might as well take your money around the back of the house and burn it. So by the time you got to the high double-digit inflation in the 70s, capital basically went on strike. They said, why bother to invest? Whatever I think I'm going to get as an investment 5 years from now, the inflation's probably going to be higher. So what happens to an economy that's running at full pelt with super tight labour markets if the investor class stop investing? Well, your rate of growth is going to fall, and eventually you're going to start to see some unemployment while inflation's still going up, which is what we had in the 70s. So clearly this can't go on, right? So what do you need to do? See if I can get this one. Go on. Yay, there we are. Here's your hardware modification. Old white men with gold medals, otherwise known as central bankers. Suddenly they become important because control over interest rates was given away to them. Politicians didn't get to decide that anymore, and that was a global phenomenon. And the software upgrade was what we call neoliberal politics. Because if the problem is inflation, the solution is to get the money out of the hands of the politicians, give it to independent central bankers, and then globalize, integrate, liquidate, privatize, and do all the rest of the stuff we've been doing for the last 30 years. Why? Because if Canadian labor has to compete with American labor, and they have to compete with Mexican labor, and the whole lot of you have to compete with Chinese labor, what do you think is going to happen to wages after I make unions borderline illegal? They're going to go down. And then what's going to happen to the capital share? It's going to go up, but this time with no inflation. So that 5% real rate of return is going to become 7%, going to become 10%. So what happens to the capital labor share of national income? Ooh, welcome to the inequality of the period. Bugs in the software. So this seemed to work for a while, but underneath it all, there was a problem. No, back one. There it is. And here's the problem. So basically, that first computer kind of starts to get into trouble in 1973. Look what happens in 1973. COLA contracts mean that the wages adjust the productivity so that they're relatively equally shared. And then they don't. And then hourly compensation essentially stagnates while productivity goes up. That gap is essentially the inequality spread that the United States economy sees between business and labor. And I'm going to show you that in 3 different forms. So all that productivity is a monetary value. So how much is that monetary value? Let's find out. No, back one. Thank you. So if you're in the bottom 20% from 1979 to 2016, you haven't seen any of it. In fact, you've lost 1%. If you're in the 20 to 40%, you have seen a 0.77% real wage gain since 1979. In other words, the square root of diddly squat. If you're in the middle, you have done well. You got nearly 3.5% over 40 years. If you're in the upper middle, you got 10%, which is just about enough to say that you're treading water. And the whole thing goes to the top. 27.41% for the top 20%. Now, if I break that out, which I will in a minute, you'll see where all those returns really went to. Next one. So here's that thing I keep talking about called labor share of national income. There's 1973. It peaks at about 65% national income. So what that means is everybody who gets a W-2, which is 90 to 95% of Americans, they're the people who are there. And that means they get 65% of the whole pie, right? Where are we today? We're down at about 57%. So you go from there down to there. By the way, that's the stock market bubble in 2000s. And that's the only one that ordinary people got to play in, which is why they won it and lost it. But that goes all the way down here. So that shift from basically 57 up to 65, that's that prior gap in a different form. If all that productivity is going to essentially 5% of the population, that's the result, is the swing in who gets the share of the pie. You with me? Yes? Okay, good. Next one. There we are. Right. Now, this is globally. This is fun. So, of course, the defenders of that regime will say, yes, but you're missing the point. I take a global view of things because I'm a globalist. And I'm really concerned with the welfare of the whole planet. And on a planetary level, this new regime's brilliant because, like, think about it. China has taken 500-600 million people out of abject poverty and made them up to like between $6,000 and $14,000 a year, depending on where they live. That is the greatest poverty reduction program in human history. That is nothing to be sniffed at. Absolutely right. Chapeau, as they would say in Quebec. But this is total income growth across all world regions, 1980 to 2016. So here is literally the poorest person in the world. Here is literally the richest person in the world. You can't see this. It says 99.999. So this is the 1,000th of the 1%, right? So look what happens. That's China. All of that is basically China. They got a bit. They got the bottom 50% captured 12% of total growth. Now, there has to be a squeeze somewhere because if you're integrating with Chinese labor, core wages are going to go down, and that's what happened. So this is the squeezed bottom, the 90% of the US and Western Europe that hardly got a pay rise. That's that bit. Now look what happens. 90th percentile, not much action going on. 99th, you're just to there. So the 99th percentile of the whole world hasn't done as well as China in terms of absolute growth. But you're the 99th percentile in terms of how rich you are. There, you're only going from the poorest person in the world to the 40th percentile. So yeah, you can grow faster, but you'll never be as rich as that person. So look what happens next. 99.9, 99.99. 99.999. That's where all the money is. The top 1% as a whole, this bit, captures 27% of total growth. So what that means is the top 1% globally took more than the entire emerging economies, including China. Now let's just do this for the US and Canada and Western Europe. Poorest person's income growth, how much they're growing over time. A wee bit. Flat, 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 flat. 90th, 99th, no, 99.99, 99.9. Oh, look, same shit, different smell. It's all gone there. Now, this isn't a jealousy story. Don't get me wrong, right? I'm loaded. I'm part of this problem. And it's a problem because it's totally unsustainable. That's the problem. It's not about we should take from these people because they don't deserve it. I don't give a shit about that. I care about the fact that this is fragile. I'm going to explain why, and it's very, very dangerous. Not least of which because I have to keep giving talks about it. Can we do the next one? Right. So just put yourself in that position. You're not really getting a wage raise for 30 years. How do you keep it going? Let's see what happens. Next one, please. So remember that thing between productivity and then productivity went up, wages went down? The green line is the growth of broad money in the economy, which reflects how much people's purchasing power is there for real and also how much banks have in deposits. This is bank assets to GDP. Now, here's the greatest trick in human history. What a bank calls an asset, anybody in a normal world calls a liability. So when you have a mortgage, right, the bank says that's a liability. Because it is, because they've given you this money, they might not get it back as far as they're concerned, that's a liability. Their asset is the income stream that you pay them every month. Now to you, the mortgage is the liability, the house is the asset, and it all sums to zero. Now, if you live in a world where basically income isn't growing, and yet banks' assets, which are everybody else's liabilities, are growing almost exponentially over a 30-year period, that tells you what? That the banks are lending an awful lot of money. Now, why would they be doing that? Well, remember on that first computer, money was tight. If you're old enough to remember it, do you remember things like higher purchase restrictions? Right? You remember like interest rates like 18% if you want to buy a washing machine, right? It was all for macroeconomic control. That was it. These were little control variables for the government to twist. And on one reading of the world, that's crap, because there's a huge amount of capital out there that could be lent. And the whole point of the banking system is to intermediate between people who want the money and people who have the money. Rule number one of banking, never give money to anyone who needs money. That's an entirely different proposition. But if you want to buy a washing machine, different lenders can compete in a free market, and you should pay 18%. You should pay 5%. In actuality, you buy on a credit card, you go into default, and you pay 37%, but that's a different story. That's the theory, at least. So anyway, there's been a colossal ramp up in bank assets, which are other people's borrowings. Next slide, please. Now, this is when it all started to go mental. I lived in Baltimore from 1997 until 2009. Yeah, more or less. And in 2004, I don't know if it was the same in Canada, but in the United States, you couldn't get in your door at night. You'd open your door and you'd push it in, and you couldn't get in because there were 300 credit card offers behind the door. Do you remember this period? It was like, there were forests in Java falling just to make these credit card offers. And this is my best, I love this one. This is a real billboard. This is not altered. This is not fake news. Citibank in America had, well, globally, had an advertising campaign. They spent $100 million, that's how much money they had, globally advertising this slogan. It's just a slogan between 2003 and 2005. Live richly. Open a cravings account. So sociologists and philosophers, they have this wonderful term, normalisation, right? It's when something totally insane becomes normal. And that's that one, right? Because, I mean, I'm Scottish Catholic, but we're all kind of genetically Presbyterian on some level. And you know exactly what I'm talking about, right? It's that whole bit about love thy neighbour. Fucking get them. But anyway, that whole thing is just bonkers. I mean, the Scottish one, obvious, Adam Smith, it said, save up something. And the Germans have a great one for this. Erst sparen, dann kaufen. First save, then spend. No chance. Let's just spend money we'll never have, right? Now, this isn't a prudence story. This is a how do you get by when costs are increasing. Everybody tells you there's no inflation, yet the cost of everything that matters is actually going up. Education, healthcare, all that sort of stuff, right? And the only way you can fill in the gap is to borrow more money. That makes perfect sense, because the whole point of borrowing, from a banker's point of view, is what they call the maturity transformation. Very simply, what that means is not only do you want it and I've got it, right? I'm taking money at a time that it's not needed and putting it forward to you in the present so that your forward income can be drawn to cancel it out, right? You borrow from the future. But that only works on the assumption that your wages are growing, so that when you take the debt on now, it's a smaller proportion of your income in the future. What didn't happen? The wages didn't go up. That's why this built fragility into the system, because you cannot sustain that huge amount of bank assets unless the income streams that validate them continue to come in. And by the time that you start doing this, you know you're peddling bullshit, right? Because what you're doing is trying to find income streams to capitalize the loans you've got out there, which you know are already bad. Why do you think they got into subprime mortgages? So here's this in lines. This is Euro area consumer credit, 1996 to 2019. The data doesn't go back before that. But the European economy, since about that period, grows on average in real terms about 1.5% a year. That's basically a 4% compound increase when you smooth it out. So Europeans, even the Germans, are borrowing twice as fast as their income growth. Now let's get to the Americans. Does this need any explanation? We're in the prudent period where you can't borrow much money, and then we get to the, oh, screw it, let's just borrow everything, and then we have a financial crisis, and then we go, oh, we'll keep going, who cares, right? And this is what this looked like, and this is why this all ends up. The bugs in the system this time were debt leverage, which is basically banks have lent out way more than they'll ever get back relative to the assets that they have, which are real assets. So what does that look like? You remember Iceland? Yeah. So it's a shame you can't see this, so I'll just read it out. Iceland's GDP is $8.5 billion, right? So basically it's about the size of, I don't know, Toronto minus half of the suburbs, right? It's just not big. And they managed to have banks that had, when you add all this up, 4 banks, it's 1,000% of Icelandic GDP. So how do you bail that out? You can't. You default on everyone and you put up capital controls. Now let's look at the Brits. They at least had their own currency, right? So they could bail their own banks. And they needed to, because when you add up RBS that went bankrupt and became a ward of state, HSBC, HBOS, which went bankrupt, and Barclays, which didn't, that's nearly 400% of GDP. The Germans, as the conservative ones, and they do not do the mad borrowings. Oh yeah? Deutsche Bank, 86% of GDP. And they're in the euro, which means they don't have a printing press. Now, on an average Tuesday, Deutsche Bank was running 66-to-1 operational leverage, which meant for every actual hard dollar in reserves that it had in the bank, in whatever form, they had 66 out there in loans, derivatives, and all these different products. So that means a 2% turn against their book wipes them out. And their government can't bail them out. This was a catastrophe waiting to happen. And where were all the regulators? Where were the politicians? Where were the borrowers? Nobody was paying any attention to it because we were told it was the best of all possible times. Ben Bernanke did a paper called The Great Moderation, just 2 years before it all kicked off, about how a combination of smart central bank action, the right economic ideas, and good policies had tamed the business cycle, and we were living in perpetual prosperity. The minute anyone ever writes anything like that, buy gold. Simple as that. It's like in technology, when anybody says the words new paradigm, shoot them, short them, and run. That's what you should do immediately. Next one. So the problem was, if you go to the first computer, when it crashed, basically the people who run the world, the investor class and their allies, said, we can't do this anymore. If you want to have capitalism, there has to be profits. We can't just run it all off in inflation. There needs to be a system reset. So there was a big showdown with Labour, and there was a big showdown with left parties. And there was a hardware modification, the rise of the central banks, there was new economic ideas about globalization and free markets and all that sort of stuff. So you could imagine it was almost like the computer broke, you took it to the repair shop, they went, oh, this one's in a bad mess. It'll cost you a fortune to fix this, mate. Do you want to do it? Yeah, go for it. So they really fixed it and put a whole new S on it, a whole new operating system. 2008, we didn't do that. Because those central bankers that we had made all powerful, that were there to guard the money and make sure we never had any inflation, they were the only people that knew what to do and had a printing press. Now, central banks can do two things. They can raise and lower the price of money, the interest rate, or they can buy and sell assets, which is another way of rationing money. That's all they do. So what the Federal Reserve did was take its balance sheet from effectively about 800 million to about 4.5 trillion. And what that means is all of the crap assets in all of the banks and that giant red line I show you that went bad, they bought it and gave them cash or other securities. And that stabilized the banking system. And then the Federal Reserve stabilized everybody else's banking system because they were in Euroland and they couldn't bail themselves. And also their banks had borrowed in dollars. So even if their governments could print, it wouldn't make any difference because they needed dollars. So the Fed does $4.5 billion in spending. Now let's think about this for a minute. Trump decides to go for Iran next week. Do you think there's going to be any discussion of, oh, I don't think we can afford that? No, no. But when it comes to anything that matters to ordinary people, there's never any money. 4.5 trillion, 3 trillion. Altogether, $17 trillion euro and yen was invented. 20% of the global money supply was added to the global money supply. They found all that money. Why? Because they were bailing out the assets and incomes of the top 1%. And that was not going to be allowed to fail. This time around, no crash, no hardware modification, no reset, just a giant liquidity pump to resuscitate the heart of a broken system. Well, that was heavy, wasn't it? So what happens when you bail out that massively levered system? Anybody use one of these in the kitchen? That's the past decade. Volatility suppression. You didn't allow the system to reset itself. All of those pressures, stagnant incomes, high debts, inability to pay it back, no inflation to eat away the debt, massive skewing of the income and wealth distribution. People who have everything saying there's no money for anything for you lot as public services get cut. Meanwhile, places like London and Toronto go boom, boom, boom. Volatility. Compressed. Try it again. Now, the funny thing is, well, it's not funny, it's kind of weird. Econ 101 will tell you the following. An economy is a bunch of stuff. This is denoted by a bunch of prices. And the way that you access the economy is through a device called money. So let's say it's hard to change the amount of stuff in the world. It's relatively easy to move prices. So if I was to add 20% to all the money in the world, what has to happen to prices? What hasn't happened? Exactly that. In fact, inflation has been going down and down and down and barely has ticked up. It's now down here again, in actual fact. And there's the same thing. And now in Euroland, they're basically, actually that's euro. Here we're about 1.7. Euroland, you're basically almost close to negative. So what happened to the money inflation link? Well, you could say that people aren't spending as much, the multiplier for money has gone down, that the public sector filled in for the private sector. But when you look at the numbers, it's simply not true. I mean, what the central banks were doing with this stuff called quantitative easing, they were basically pushing up the prices of stocks, bonds, and houses in the hopes that somehow that would trickle down to everybody else. And in fact, what did that do? It just basically made people who have stocks, bonds, and houses even richer. Now, you can make an argument about rich people don't spend as much as poor people, so there's actually less cash in the economy. But nonetheless, you dumped 17 trillion and there's no inflation anywhere. Now, why does that matter? It matters because back in the 70s, how many of you were lucky enough to buy a house in the period between 1968 and 1974? Anybody? You played the biggest scam the world's ever seen because you had a 30-year fix at 5% and inflation went to 10. And the bank ate the difference, which is why your kids will never have a house the same size as yours. That's the truth, right? A little inflation's a damn good thing if you have debt. And most of us are debtors. The problem in the 1970s was the creditor class, the investor class, were being beaten to death by inflation. It was turning into a debtor's paradise. Problem, what's this one done? A creditor's paradise. There's no way out of the debt. And why not? Next one. Because your wages aren't rising. And also because of those bailouts. You see, with those bailouts, let's have a look at the US. You're constantly told that there's no money for anything. It's austerity everywhere. There's no money to spend. We've spent it all. We don't have anything. We've been spending like drunken sailors. I mean, it's the simplest thing in the world is just to have a look at this and check it out. So here's the US debt to GDP, 1995 to 2000. Does that look like an upward trajectory to anyone? No, it was actually going down. Now, it did go up to less than where it was in 1996 by 2007, and there we had what? The dot-com nonsense, followed by 9/11, followed by the Iraq War, and that's what that is, right? There's no orgy of spending on normal people. Now, can anyone tell me what might have happened in 2007 that would lead to a lot of government debt being produced? Oh, I don't know, bailing out the global banking system? That might have something to do with it. Boom, that's what's done it. There's been no orgy of spending on stuff for people. EU, exactly the same thing. Going down into the crisis. It's all the crisis. It's the consequences of the bailouts and then the massive recession that follows. Because then tax receipts go down, so revenues go down, claims for assistance go up, everything goes into reverse. You end up with a yawning deficit that shows up in debt. It's plumbing. It's not politics, it's plumbing. Now what that means is, the first one is there's no inflation to eat away your debt. The second one is you're being told by the political classes there's no money for anything because there's too much public debt, which is a bit of a laugh because it all went on saving the banks. And this is the best one. Interest rates. Now, again, you can't really see this, I'm pretty sure. But look what this is. This is the coolest graph I know. Germans who work for the Bank of England are insane data monsters. And this is a guy who works in the Bank of England who produced this data set. This is real interest rates since 1314. I know. If you're a geek like me, I just looked at that and just went, you rule, you are the master geek, right? Now, what is the master geek? Paul Schmelzling, brilliant German name. Anyway, what is this show? So who watches Game of Thrones? Come on, admit it, there's more of you. There's a point to this. Right, all right. So who really knows the whole thing? Who really watched the whole thing? Come on, give me it. Right, okay, right. So cool question for you, right? So let's say that you're the Iron Bank of Bravos, and a sovereign comes to you, and the sovereign's name is Cersei Lannister, right? Now, if you lend to Cersei Lannister, there's a high chance either you won't be paid back or you will be murdered in your sleep, right? So will you charge her a low rate of interest or a high rate of interest? Very high, right? Now, let's say that Cersei, right, and Jon Snow gets elected king, and forget the whole thing about his brother, that was just weird, right? So Jon Snow becomes king. Now, you know you won't be murdered in his bed, and he's united the 7 kingdoms. So the pool of assets against which he's lending is now a lot bigger, and Jon's not a complete shit. More or less interest. See that red line? That is basically what's happening. Right? You've got all this volatility, which is wars and all that sort of shit. But the long-run trend is down. And what that means is the global pool of capital gets bigger and deeper all the time, so the price of money falls. And where's all the inflation? It turns out that the 6 big inflation spikes over that whole period, there's actually 10 big inflation spikes. If you take out the Napoleonic Wars and the Elizabethan period, there's 7 left. 6 of them happened in the 1970s. Yeah, isn't that bonk? I love long-range data because you find out stuff like that. You're like, that's amazing, right? So the red line all the way down. So what that means is the structural rate of interest in the world keeps going down. So here's the 1300s, right? Nominal 8, real 6. There's the 1400s. That's when it was hot in the fan, right? A 13%, 10%. But look where we are in the 2000s, right? Nominally, 3%. That's actually gone down. And the real rate of interest is about 1.5%. If you're in Germany, it's actually negative. Because you've got lots of old people who save too much and don't spend anything. Trust me, I'm married to a family of them. I know. They make Scottish people look like, I don't know, what's the opposite? A spendthrift gone mad, right, basically. They have this thing, the way they, are there any Germans here? Yeah, okay, good, right. You know the concept of Abendbrot? Abendbrot. No? All right, so basically, in the morning, you get up and you eat a big breakfast. Then at lunchtime, you eat a big lunch, but not quite as big as your breakfast. And then you come home at night, you don't go to a restaurant, and you basically take out brown bread, put butter on it, stick a bit of cold meat and cheese on it, and call it dinner. This is not a country that's generating a lot of excess demand. So anyway, the consequences of this, right, going back to the early one, right, your wages aren't rising, there's no inflation to eat your debts, and now interest rates are structurally low. So what does that mean? You can keep revolving your debts. So you're stuck in a kind of debtor's treadmill. You never got, think student loans in the United States. You never get off it. Now, if you add all that together, did I miss one? Oh, I didn't. All right, well anyway, that's a shame, because bloody, there should be another slide. Can we go back one? Weird. There's meant to be a next slide, and the next slide is a picture of all those populists again, because basically that's what's going on, right? Globally, you've got a situation where debts are too high for everybody up to the 90th percentile. Their wages aren't growing, there's no inflation to help them get out of their debt, and the interest rates are low enough that they can keep revolving their debt. But at the same time, there's a whole elite who have done really, really well, who got their assets saved in the crisis, who spend their time mansplaining to you why there's no money for anything else. They're all doing fine. All their kids are going to elite universities like mine, right? Not the ones that you're going to if they're going anywhere at all. And you're told that everything's the best of all possible worlds. So how many of you believe that story? You can put your hand up. It's a democracy. It's fine. You can do that. So anyway, moving this forward, because I did say the future of the global economy or something like this. Can we do it? Yeah, we are. What does this play out for the next few years? Right. Get back. God. Yes, stop there. Right. So this is where the United States is at the moment. And people are just puzzled by this. It's actually pretty straightforward, given what I said. Labor, you can have full employment, and it doesn't mean your wages are going anywhere. They're just not. So, you know, the United States has been at full employment for 3 years. And you can say the participation rate's down, the quality of the jobs isn't as much, right? But there should be some effect on the labor market. And there's a tiny little effect. But most of it is because cities have raised minimum wages and Walmart raised their wages. That's really what's done most of the work. Why is this? Because jobs can be moved abroad or automated. Unions are absent or powerless. And immigrant labor is the one thing that gets politicized over this whole thing. Because if you're at the bottom end of the income distribution and it's your neighborhoods that people are moving into, and labor markets are incredibly tight, yet wages aren't growing, people are seen as a threat. People in my class, when somebody who's just different from me, as different as can be, wanders into my neighborhood, they've got a PhD. Right? Their kid's going to go to the same snotty school that my kids go to, right? We'll probably have dinner together, even though we worship different gods. No problem. That guy's not taking my job. There's no danger. So that's baked into the cake. Weird thing. This is also true for business. This is the bit we don't pay attention to. So many of you own your own business, or have done in the past. Right. So would you describe your profit margins as huge? Right, no, right? So the weird thing is, unless you are Amazon or one of these digital monopolists where the marginal cost is zero and you live off of information, or you're a healthcare agglomeration that basically never reveals its prices, or you're pharma or one of these things, you face global competition in a lot of sectors, and that means your margins are wafer thin. And as a consequence of that, the only way you make money is on volume. Right? Hence why there's no Mr. McDonald's, there's just franchisees, and each of them are making nothing. But if you add up the total value of the corporation, it's in the billions. And what does that mean? Margins are super thin. So the incentive is to do anything except push up prices or wages. Product markets have been in deflation for 25 years. And the only thing that big corporations care about is keeping the whole thing going with quarterly reports and everything to the shareholders. Simple example of this, the iPhone. 10 years ago, and this is an iPhone 7, I probably couldn't sell this for $200 now. 10 years ago, this was a supercomputer that was worth probably $10,000. That's how quickly the cost of these goods fall. Think about the stuff that used to cost a fortune to get in your house. Now cost peanuts in comparison. Projectors. I don't have a TV, I have a projector. When you started out getting projectors, they were like $5 a pop. Remember big screen TVs? Now you can fling them across the lawn, they're cheap enough. You can use them as frisbees. right? So for most companies, it's just like the same situation for labor. Now imagine creating a world in which the majority of businesses are feeling as bad as the workers they're employing. That's not feeling very good, is it? Can do this one? There we go, that's it. 2 pictures, who's this? Charles Darwin. Who's this? Daniel Dennett, absolutely right. There's something very, very creepy about people who look like the people they write about. There's something very strange. So there's a guy called David Harvey who writes about Marx. Google David Harvey, Google Marx, put them together, it's a bit strange. Anyway, why am I mentioning this? He had this idea that when Darwin invented the term evolution, it became the universal acid. And he meant that metaphorically, that the minute you start thinking evolutionarily, you can find an evolutionary explanation of anything, right? Why does your daughter keep coming home with the wrong types of boys? Well, evolutionary speaking, they're not the wrong types of boys, because big prison tattoos signal strength, right? You can come up with anything you want, right? And that really would be an evolutionary explanation, right? So if you think about what neoliberalism does, let's think about it as the universal acid, right? First of all, the problem is inflation. So it eats through all of the structures that protect labor, so that labor gets the short end of the stick and we end up generating a banking crisis to keep the whole thing afloat. But it turns out the next thing it does is it does exactly the same thing through product markets, such that most businesses couldn't raise wages even if they wanted to. Now, let's go to politics. So you've done product markets, you've done labor markets. What's the last thing left? Political markets. Because all the parties that we've grown up with are the parties that grew up not under neoliberalism. They were invented at the end of World War II. The British Labour Party was even before that. So these parties were there to stabilize and make work a closed system of economies from version 1.0 that died in the 1980s. And then they all had to reinvent themselves in various ways to catch up, and we had New Labour and New Democrats and all that sort of shit. And basically they were just crap copies of the first version. And they said everything was fine and banks were fabulous and all that sort of stuff, and then boom, the whole thing went up in smoke. And guess what? They're still there. The only thing is, no one believes them anymore. Now, that's the fourth element of populism. Your debts are too high, you can't pay them off, you can roll them over, they're not going to be eaten away by inflation, and the people who brought you here have zero credibility. Now, let's think about what populists are. They're rogue code writers. They're the people who are trying to edit the software. They're trying to withdraw their computer from the global computer and try and isolate it and write new code and change bits here and there. Now, the problem is, like most people in their basements, they don't know what they're doing and they have inflated opinions of their abilities. But that's what's going on. Next one. So what happens next? Growth becomes critically dependent on returns to finance. That's nothing new. Finance is constrained by structurally low rates. That's that red line. Debt reduction is constrained by low inflation, but debts can be rolled over. Next one. Sustained wage growth fails to materialize. Ever higher levels of inequality and sharpened urban-rural divides appear. The skill bias in labor markets, in other words, what you get paid in cities working for Microsoft versus working in a shop in a normal town, gets accentuates. And finally, the bailed regime becomes politically unsustainable. All the centre parties fail and the neo-nationalists become the winners. There's the picture. Now, what have they all got in common? Because I started off with just the funny ones and the right-wing ones. Who else is there? Jeremy. Who else is there? Nicola, right? I could also add now the German Greens, who are the biggest party in Germany. So there's a left-wing version of this as well as a right-wing version of it. And what's happening is they're eating the centre and just chomping it away. Now, I could go on, but I've probably gone on long enough. Anyway, there you are. So basically, left response, blame capital and globalization. Right response, blame immigrants and globalization. Same shit, different smell. That's it. I could do a bit on Europe. I could do a bit on Brexit. You want to see the bit on Brexit? That's fun. You want to do the Brexit bit? All right. So basically, there's a bunch of consequences. Keep going. Yeah, you're not going to do that. Forget Europe. More Europe. Actually, this is quite funny. Hold on. I'll tell you when to do this, right? More Europe, the Macron agenda. We're going to save Europe. So this is like government economic. We need more European institutions, right? Press the button. Common deposit insurance. That's a good thing. So you can have common banking deposit insurance. It's a good shock absorber for a financial crisis. Common safe asset, risk pooling, basically all that sort of stuff. Next one. EU-wide unemployment insurance is a very good idea, President Macron. That's very good. And the next one, more Europe. No, the answer to anything in Europe is more Europe, right? So next one. Let's see what the problems are. Merkel says 9. Next one. Merkel says 9. Merkel says 9. Merkel says vielleicht, which means perhaps. That's pretty much what the European agenda was. Next up, yeah, the rest of Europe says no. There's your problem. Next. All right, keep going, forget that. I'm not going to go through all that, it's too much. Right, that's it. So forget it. Good, here we are, that's it. No, next one. Next one, yes, thank you. A minor but distracting affair, as I like to refer to Brexit. Go ahead. So this is the David Davis negotiating team arriving in Brussels. It's in pounds, shillings, and pence, and I have a red passport, right? Well, that's the common portrayal, but there are actually real issues involved. But strangely, I never thought it was for the Brits. If I was Greek, I'd have every reason to be pissed off when you consider what happened in 2015. But for the Brits, it's a bit more interesting. See, the Brits has this giant financial sector called the City of London that clears all the euro transactions that are made in euros. So they make a fortune off of this. So you wouldn't think they'd want to get out of that. Next one. They'll never join the euro. Because if you do, you have to put up with all this crap the Germans make up about fiscal compacts and austerity and all this. And the Brits are very good at doing austerity, but it's self-inflicted austerity. If you look at gilt yields, like the yield on a 10-year bond, all the way through Osborne's austerity binge, gilt yields never moved. So this was like, no, I'm sticking it to the poor because I'm evil and I'm George Osborne. That's basically what that was. But anyway, they were never going to join the euro. The government got to veto what it didn't like because it was one of the big three. And it could basically shape the rules to its advantage, which is why it got to clear all the euros, right? So it had a really good deal. It got free market access to 60% of its trading partners, and it was never really in the EU. So this whole thing is about leaving something that you were never really a member of, which is a bit existential on some level. So that was the best deal ever. And then Cameron, a man who looks like he was made out of cream cheese and baked in the oven, decided to go to Brussels and say, I'd like a better deal than the best deal ever. And the Europeans went, one moment, what the hell is he talking about? I have no idea. It's the best deal ever. But he wants a better deal than the best deal ever. How can you have that? I have no fucking idea. Is he drunk? Well, he is British. That seems to be the sum and substance of negotiations. Next. Now, why did it take them so long to get nowhere? Who's this? Anyone know? It's a mathematician and economist called Kenneth Arrow, which goes to prove that pretty much all economists have some kind of social personality disorder. But anyway, his things about, so economists get Nobel Prizes because they're fake Nobel Prizes. They're not real Nobel Prizes. They're actually not. The Nobel family hated economics. But apart from that, so most recently is a guy called Richard Thaler who does behavioral economics. He got a Nobel Prize for pointing out why when you talk to your stockbroker, you might get things wrong. They get all. There's another guy called Danny Kahneman. He got a Nobel Prize for pointing out the mistakes you make when you buy milk. Basically, that's what you get rewarded for. And he got it for pointing out the following. Have you ever had this problem? 2 kids in an ice cream parlor. And you say to them, what do you want? And he goes, I'll have strawberry. What do you want? I want chocolate. And then because the other one hears that the other one wants chocolate, he goes, no, I want strawberry too. So, all right, 2 strawberries, fine. And you're just about to put the second skip in and somebody goes, vanilla! And you go, all right, fine. So you've got strawberry, chocolate, vanilla, right? So we're going to do 1 chocolate, vanilla. And basically this keeps going on. And you end up with what's called the cycling paradox, which is you started with chocolate, you went to vanilla, and then you end up with rum and raisin. You cannot prefer rum and raisin to chocolate. You can't. But the British Parliament can. Because it can basically keep saying, no, I don't want that, but let's vote on it again. And I still don't like it. If I tweak this bit, I don't like it. If I tweak this bit, I don't like it. Yeah, but that was the same as that bit. Okay, well, then I'll vote for it again. So they just kept going round in an Arrow's paradox cycling cycle for about 2 years. Any deal is worse than what you have. By definition, it's going to hurt, hard Brexit or not. And there's no incentive for a second referendum from either the Tories or Labour. This is particularly true now that Boris is going to be Prime Minister, which in and of itself is a sign of an existential crisis. I mean, you know, he's a buffoon. He's a buffoon's buffoon. There are buffoons going, I'm sorry, that's too much buffoonery. He's a buffoon squared. So we've got buffoon squared. Now, the thing about him is he knows one thing. If he doesn't deliver Brexit, he's dead. But if he does deliver Brexit, he's probably dead too. So his incentives are aligned, but weird. The interesting one, though, is this guy, Jeremy. See, nobody quite understands what's really driving Jeremy, because Jeremy was never meant to be leader. So he really is Bran. Right? He's Bran the Broken. But he's also Cersei Lannister. And here's why. He survived 2 serious coup attempts to get rid of him. The last resort is to try and say that everything a guy who never wanted to be Prime Minister, who's a career backbencher, an internationalist, a committed socialist, right? He himself is a committed, lifelong anti-racist, is actually someone who hates Jews. That's how low they will go to try and get rid of this guy, right? And it's not working. It's not working at all. He is a survivor. Now, ask yourself the question, does he really want to be Prime Minister? It's a shit job. And it's going to be an even more crappy job after Brexit, picking up the pieces. I mean, don't get me wrong. Like, if the Brits want to do it, fine. I don't care. The Brits leave, the Scots are gone. I'm all right. I don't care, right? Now, and in 5 years' time, what will happen is they'll survive, right? The notion of, like, if you don't live in the EU, like, you know, the spaceships will come down and the devil will come in. No, it's not true, right? You'll be fine. But there will be 2 to 3 to 5 years where it's going to hurt, right? Simple as that. Now, why would you want to be Prime Minister during that period? Well, he doesn't. What would a career backbencher, internationalist, anti-racist socialist who's lived in Parliament from the time of Thatcher really want to do? Destroy the Conservative Party. And they have strapped a bomb to their chest called Brexit. And Jeremy's thing is, let me see if I can help you tick that down. Shall we have negotiations that will be totally pointless? Shall we talk for 6 months about possible deals? Well, I piss off 2/3 of my own party that really want a second referendum. And this might cause me to lose my job as the leader of the party? Yeah, because I want to see that thing blow up. Because I might destroy the party of Margaret Thatcher. That's what this is really all about. So what happens is Boris will deliver a hard Brexit. Because that's what Boris would do. And there was recently a survey, I posted on my Twitter feed, you can find it, of Conservative Party members who are willing to actually lose Scotland, suffer very serious economic harm, and I think invite the second coming of the Baphomets in order to have Brexit. All right? So this is a serious thing. It's going to happen. And Jeremy's like, yeah, go on. So it's going to happen on Halloween. Does anyone think that's appropriate and funny? I do. I think it's brilliant. It's like all the demons come out at once. So anyways, it's Brexit. It's a minor and distracting affair because 5 years from now, nobody will care. The language of finance is English. The language of finance is tech. They sit in the best time zone in the world for communicating both with Asia and also with the United States. Nobody moves because of this stuff. It's all bullshit. It's a great little book if you want to read it. People will tell you, if you raise taxes, the people with money will go, which begs 2 questions. The first one is, why do they have all the money that I would need to care that much? And secondly, do they really go? And the answer is no, they don't. They really don't go. You can stick punitive taxes on people that won't go, and here's why. Hi, honey. Look, sorry, bad news. I know you're really comfortable here in Chelsea. The kids go to a great school. We've got this lovely house. We're super connected. You're doing your charity work. Everything's fine. We're moving to Mozambique because they have no taxes. Yeah, it's going to work, right? They're really going to go for that one, right? So it doesn't happen, right? So Britain will take a self-inflicted punch to the face, and that's not the first time that's happened, and then it'll be fine. That's pretty much what happened. So anyway, I could go on and on forever about everything, but I'll just stop there because it's 8 o'clock. Bye. hello, whatever. Someone once wrote in a review that when I give talks, I struggle for incoherence. I think that's a remarkably accurate statement.
So I will now take questions from the audience. Yes.
This is my revenge on Stefan, treating him as Mike Boy.
Phil.
So my question has two parts. The first part is, what is an ordinary working bloke to do? And what is what? What is an ordinary working bloke to do?
Right.
And what is an ordinary retired bloke to do?
Right. Okay. Well, if you're a retiree in this generation and you haven't spent it all on drink and loose pastimes, then you probably have assets. And the one thing that we know is that these governments will protect those assets no matter what. So if you have enough to finance your retirement at current prices, you'll probably be fine. If you don't, there's a problem. But that problem's 30 years in the making, right? What's an ordinary working bloke to do? That's a really, really good question. It depends where you are. It depends where you are in the life cycle. It depends how if you can move. There's lots of things like that. But there's also, hopefully it's not an individual problem. And what we spent the past 3 days doing at the summer school was thinking about all the things that could be done. Now, you know, the most obvious one is tax the rich, right? But that's kind of difficult to do and old and doesn't really work. And you've got tax havens and an entire legion of accountants that stop these things working, right? But there's loads of things that you can do to make things much, much better. But they tend to be solutions that aren't for right now. They're multi-year, if not generational, right? So one of the ideas, because I'm deeply concerned about basically millennials, right? And here's why. They don't have any money and they're already in debt. And we didn't have enough of them to pay your pensions. So we need to basically transfer assets, either transfer assets from your generation to their generation, or alternatively, make new ones for them. So you got all this stuff about millennials, all they care about is eating avocados, they don't like cars, whatever, right? No, they basically can only eat avocados and they can't afford a car. It's just a very different proposition, right? So one of the ideas that I like that we're kicking around is the notion of a citizens' wealth fund. So you know sovereign wealth funds, basically the export earners have all this cash and then they buy equities and airfields and all that sort of shit, make money off it. Saudi Arabia's, Abu Dhabi got one. Norway has one, it's a classic example, right? But everybody could have one. So imagine this, imagine I'm Britain and there's a financial crisis. When there's a financial crisis, everybody who's got equities, shares, sells them because they don't want to be caught with something that's worth less the next day. Right? So there's an exaggerated depreciation. Now, what is it they want to buy? They want to buy gold, but there isn't enough of it. And the problem with gold is it's a fear index. At the end of the day, you still have to turn it into money. Right? So you want to have something that's cash-like, only is safe. It's called government debt. That's why you were able to sell so much in the crisis and still have negative interest rates on government debt. So basically, bond prices and interest rates move inversely. The more demand there is for it, the less the government has to offer an interest, and the more the price of the bond goes up. So if I'm the British government, there's a big financial crisis. Everybody with equities goes, and the stock market starts to fall. I say, would you like some gilts, some government bonds? And they go, yes, please. Well, if I issue 20% of GDP extra in bonds, I'll be able to sell all those without paying any extra interest at all. Let's say I take the cash that I get from that and I buy all of the equities that these people have dumped, because I have long time horizons and you don't. Only this time, I don't give them back. I put them into a special box that's completely away from the government, that has a long-term fund objective of investment. After about 6 years, it's 6% a year, because that's what these funds usually make, so 4% without inflation. Hell, there's no inflation, it's 6% real. I ride that called equity premium. I can pay back the whole 20%. Run that out for 10 to 15 years, I can make 20% of GDP. And I can just drop that to millennials by the time that they're 35 years old and say, all those student debts, gone. Can't afford the house in London? There's your deposit. Want to start a business? There you go. That's just one of the smart things you can do. And did I need to tax you to get that? No. So there's so many creative things we could do. We just lack a political class that has the imagination to do it. That's the number one problem. They're either posers, like the guy that you've got in charge just now, who's just a vacuous poser with a tattoo, if I may be frank. Or they're people like him who are living in the past, but has the right ideas in some ways. Or they're people who are on the right, who really understand what concerns people, but in my opinion, oftentimes have the wrong solutions for what concerns people. So we just have a talent problem. We have a talent problem at the top. And that's not an accident. You think about who's been paying these clowns for the past 20 years. It's the people who've got all the assets. So that's question number one. Down. Then there and then at the back.
How do you think that the threat of climate change is going to affect or alter, if any, the world economy over the next 20, 25 years?
I'm very hopeful on climate change. For the same reason that when oil goes to $150 a barrel, you get a hell of a lot of innovation in solar. So within 10 to 15 years, climate change effects will become very real. France has had all of its hottest summers in succession in the past 7 years. It's not about maybe it's not, saying that maybe it's not man-made is a bit like somebody smoking going, maybe it's not tobacco that gives you lung cancer. What do you think, right? You know, you have to have that degree of detachment at this point, right? But this is a good thing. And it's a good thing because basically we're like smokers. We don't do anything until we get the cancer diagnosis. And then we will do anything to save ourselves. But until we hit that moment, it's always somebody else's problem, and we can always do it tomorrow. So imagine the following. You know what a Superfund site is? Superfund was basically all the toxic sites left over from industrialization from the 40s to the 60s in the United States and going back even further. And the EPA, when it was set up, basically went around the United States and went, ooh, there's a giant piece of toxic sludge filled with the most deadly stuff in the world. And the federal government gave local governments money to clean it up. And some of this stuff you just can't clean up. It's so nasty. One of them is a really big one, and it's 750 feet from Miami's main water supply. Oh yeah. Now, work the following with me. Is anybody here a physicist, a geochemist, or a chemist? Anything like that? Right. Okay, so let's do a giant osmosis experiment, right? So Miami gets its water from a limestone aquifer that runs up the back end of Miami and goes for 200 miles. The Superfund site is on that side of it, 750 foot, and it's buried at about 40 feet. As the water moves up, it's not just moving up the beach, it's moving underneath. That water is salt water. What happens through a porous membrane to fresh water and salt water? So what happens when you suck a Superfund site into Miami's aquifer? You lose Miami. Now when that happens, everybody in America forms the Winston Churchill line on America. You know Winston Churchill's line on America? The Americans will always do exactly the right thing once they've exhausted every other opportunity. And that's what will happen. Now, you know, we think that global cooperation is a big part of this, right? But I hate global cooperation because I know the people who do this stuff, and they're chancellors and acrobats. They go off to Copenhagen and they have canapes and they sip champagne and they sign agreements and they go home and nothing happens. Right? So America will move when it loses Miami, right? And then nothing will stop it. I mean, that's the other thing about America, right? Once it decides it's going to do something, that's it. It all goes that way. Now, there's other places that have capital and have command and control ability that accept science and have huge problems with their food, their water, and their air. They're called China. And in 2015, China installed more fourth-generation solar in 1 year than the United States has. So they're already doing it. And the EU, if you take out a couple of shitty states that are run by idiots like Hungary and Latvia, are pretty much on board too. They just need to be pushed along. And guess who the rising parties are? Green parties. Now, if I take in order the United States, China, and the EU and add it together, I've got 35%, 40%, and about 15 to 20%, depending on you count it, of the global economy. I don't need global cooperation. I just need the three of them to move. And the thing that's going to make them move is climate change. So it's absolutely a threat. But as the Chinese say, it's also an opportunity. Now, from an investment point of view, this is the bit that I don't get, but it also gives me faith, right? If I'm an investor, here's the story on climate change. Are we going to go to carbon zero? Never going to happen, right? Even if you do everything you can with electricity, it's 30% of the energy mix. Let's say that you do a whole new grid, you roll it out, you have Ford F-150s with electric batteries, which are coming in 2 years, by the way. You can do a lot. Let's say you get to 60. You still need residual carbon use. How can you do a jet engine with no jet fuel, right? Just think about that, right? So there's no way it goes away, right? You can get more filters, right, but you cut it down. But what you do is you get way more efficient on the other side, right? And the tech is finally there to do that, and it's emerging. Now, if I'm an investor, I've got what's called covered option decisions. You want a covered option. That means that somebody's covering, they're insuring my downside, and I can only have an upside. This is the best type of financial contract. And anyone who writes the other side of that contract is a fool, because they're guaranteeing all states of the world except the one where you make money. So if you find a covered option, you just go, yes, I'll take it, right? Climate change gives you a covered option. Here's how it works. You don't invest, you die. You do invest, it doesn't work, you still die. You invest and it works half, you get to print money for 1,000 years. Why would you not invest everything in this? So once these 3 states move, that's what happens to the investor community. Boom, it goes. We'll get through this. It's what we need. Bet you hadn't heard that before. The hopeful climate change guy. You mean he's in denial? No, he wants it to happen faster. Yeah, but it's a covered option, right? If it fails, you die. If you try, you die. If you don't try, you die. Just go for it.
There's 2 entities out there. I think they're different ones. One's orange, and the other one's ENG, E-N-G. I think they're banks that do not have physical presence on the street.
Right.
And the other thing is Bitcoin. Can you comment on both of those?
Yes, I'd be happy to.
Thank you.
Banks not having physical presences, you get used to that. I mean, but there's a weird thing in this, right? Those of us who are old enough to remember, when they brought out ATMs, they said that would be the end of the bank teller. There are actually more bank tellers now than there were before they brought in ATMs, because people going to the ATMs didn't clog up banks, which meant you could open up more branches in more places, so you actually got more banks. Now, you don't get rural banks or anything like that. That's where the problem is in the provisioning of banks outside of metropolitan centres. But in terms of brute numbers, that technology didn't actually wipe us out. And I think there's always something to think about in the way that what tech does as opposed to what we think it will do. So ING can have walk-in cafes, half a dozen employees, the whole things online, etc. It still takes deposits, and it holds those deposits in central bank accounts across the world. So in that case, they're exactly the same as anybody else. They've just got a different front end of the model. There's actually not that much different to them. Now, when you get to some of the more exotic banks, if they're not taking deposits, they're not really a bank. Now, they could be some kind of, as they call them, shadow bank, a non-deposit taking financial intermediary. Lehman Brothers was one of those. But again, that's nothing new. There's always been those types of things. If you lived in the 60s and 70s, I bought my first ever bass guitar with a hire purchase firm and paid 18% real on the loan. And I had to walk down every Saturday and sign the book and hand them physical cash, right? So that's a non-deposit taking financial intermediary. So these things are just digital versions of that. Bitcoin is a joke, and it's a joke if you think it's money, because it's way too volatile. So money, to be useful, is, economists call it 3 things: a unit of account, a unit of exchange, and a store of value, right? It's also a hedge against uncertainty, which is why you care about its future value, right? And people put it under the mattress. Now, here's your problem. Is it a unit of account? Nothing is accounted for in Bitcoins, right? Is it a unit of exchange? Do you swap dollars for Bitcoin so you can get euros or Canadian dollars? No, right? Is it a store of value? Absolutely not. It can go from 700 to 20,000, right? So you can't use it for that. Well, on those definitions, and even the one about the hedge against uncertainty, it's not a money. So what is it? It's what the Chinese central bank characterized it as 3 years ago. It's a digital gambling asset. Now, if you accept that's for what it is, and you're willing to risk that capital, cryptos are great. They're fun, and you get caught in irrational fevers. And if you can time them right, you can make ungodly amounts of money. But the one thing that states do that makes them states is issue debt across generations. Their ability to do that comes from the intergenerational capacity to tax and bring in foreigners and tax them and bring in other people and tax them and sell debt to people on the other side of the world. All of that is made possible by having a monopoly on one thing: money. Do you think that the American state, who runs the almighty dollar that denominates 60% of everything in the world, is going to let Libra happen? Or Bitcoin? No chance. That's the essence of state power. You don't mess with that. Not unless you want a Cersei Lannister solution. There was a woman at the back.
In the back, yes.
Thank you. Could you please comment on Elizabeth Warren's economic policies?
I like them, but they're too technically detailed. She's right about a heck of a lot, but having a policy for everything is not a good way to do politics. MAGA, make America great again, right? Fill in what you want. Why did Obama work? Obama worked because he was a Rorschach test that said hope and change. And that was it. And everybody filled in the blanks. They just went, I'm not racist. I can vote for a black guy. Hope and change, right? Fill in what you want. Trump did exactly the same thing. I want to make America great again. And there's an awful lot of people that feel America has not been great for a long time, and that tapped right into it. Now, what does Warren do? I want to regulate the banks. Why do you want to regulate the banks? Well, you have to go through that story. So if you're willing to sit and listen to that story, then Warren makes a lot of sense. If your everyday matters really distract you from caring about that stuff, make America great again is a shortcut to get to where you want to go. So I worry about basically when things get too technical, right? In some ways, she's quite radical, but what cuts against it is the fact that basically I think there's a huge gender bias against women politicians before they do anything. So the question for Warren is always, can she get the nomination? Can she win? And it's not because it's Warren, it's because she's a she. So there's that uphill, that's just like ingrained into it. So that's why it's more difficult for her. I mean, if you think about basically what you've done in the Senate, have you been true to your principles? Do you know what you're talking about? She checks all the boxes. Why does Bernie have an advantage over her? Big, simple policies, consistency in slogans, nobody cares about your past record. Which for Bernie, to be honest, is a bit thin despite the length of time that he's been there. So I think all of that sort of stuff's in the mix. Intellectually, if I had to say which one of all the candidates has the most smarts, probably her. That's not the qualification to be president. It never has done. I'm quite serious. My favorite president is Harry Truman. Harry Truman was a corrupt machine politician's guy. He was a 4 times failed haberdasher. Right? I can't believe I used the word haberdasher, but there you go. That's what he was, right? And he was an amazing president who saved the New Deal by basically playing poker with the Republicans. Because the one skill that Harry had, he was a world-class poker player. Him and George Marshall used to play poker against anybody who came to visit them, and they cleaned them out. Churchill lost $5,000 playing at the Little White House down in Key West. They just took him, right? And he did this with the fair deal. So basically, you have the sweet, clean Congress. We're going to go back to normal, back to laissez-faire, get rid of all this crap, whatever. They're riding high in the polls. He's not meant to win the election. He just campaigns his ass off on the train. He wins the election. So well, it doesn't matter. You're not going to get to do anything. And what he did was a bluff. He said, you don't like the New Deal? Well, how about I shake all the stuff that they're doing in Germany and places like that, and like single-payer healthcare and all that, and I'm going to ram that down your throat, and if you don't, I'm going to take it to the American people, and I'm going to ride it all over you. And they lost their minds, so much so that they couldn't focus a campaign. They disappeared down the Red Scare, and they blew up, and everything was saved. That's a smart politician. That's what you need in somebody who's a leader. You don't need to know everything about the finer points of banking reform. That's ultimately what wins. Lots of hands. There at the back.
We're in the back?
Yes. Your hand? There you go.
Okay. Great.
Typically, the technique is you take the first one from where you're going back if they all go up at once. Yeah, I know. You're just but there we go.
I guess it's kind of a follow-up question. Will Trump win again?
Yes. You didn't ask me, do I think it's a good idea if Trump wins again? I just said Trump will win again. Follow-up question, why will Trump win again? Right. Basically because unless he starts a war, 34 to 36% of people 34 to 36% of people who are highly motivated to vote will turn out for this guy. Absolutely will turn out. Now, you've got 20 Democrats. Let's get rid of some of the chancellors. Beto. Go away. Just stop, right? Then you've got the lesser names, sort of Kamala Harris, etc., that really can't seem to form a coalition or a message. So you've got Warren, you've got Bernie, and you've got Biden. That's your three. Now, Biden has the following problem. He polls incredibly well amongst Republicans in suburban areas who hate Trump. We just don't know how many of them there are. And they're not that motivated to vote for Biden as much as Trump supporters are to vote for Trump. Now, here's the thing. How many Democrats get turned off by Biden if Biden muscles his way to the top at the expense of Bernie or Warren? So you've got a turnout problem that's asymmetric. So that's a problem, right? Next one, you've got to get exactly all the places that Trump won last time. When you talk to Democratic strategists, they'll say, yeah, it was only 50,000 votes. It's all turnout. Right, but who's motivated and who's not? Entirely possible that you could definitely get Pennsylvania this time. That's a huge thing, absolutely. But are you going to get Florida? Are you going to flip anything in the South? Because if those numbers hold up, given how much he's got a lock on his base, and your base doesn't show up, does anybody really see African Americans showing up for Biden? Right. Now, here's the real problem with Biden. Biden is what I call the John Kerry candidate. And here was the problem with John Kerry. John Kerry was what everybody in the Democratic Party thought everyone who was not a Democrat would like for president. Nobody actually voted for him because they were like, John Kerry, what a guy! They were like, no, we need to beat Bush. So who's someone that we think other people would think would beat Bush? That's your Biden problem. Nobody's doing it because it's Biden. They're doing it because you think that somebody else would vote for someone like that so you can beat Bush, so you can beat Trump. That never wins. So unless he catastrophically screws up, and given what he's done so far, and he hasn't blown up yet, unless he really, really tries, it's going to be hard for him not to lose. I mean, win.
With that happy note, I think we should bring
Really?
Oh, you want to keep going?
Yeah, keep going.
All right, let's do it then.
I mean, if you want to leave, just leave on your own accord. I've got a 5:30 flight. I'm going nowhere. Gentlemen in the grey.
Gentlemen are here? Yep.
Yeah, and then over here.
All right.
He's been ordering me about for 3 days, so I get to do this.
You know what I mean?
No, there was a gentleman there. Hand up. There we are.
Right
there he is. You could have done it from the other side. That's fine.
Yeah, you know.
Just to change the subject a little bit, can you comment on where the trade war between the U.S. and China is going and where it's likely to go? Trump is concerned about trade deficits, and economists think they're fine.
I'm going the wrong way. Wrong way, wrong way, wrong way, wrong way, wrong way. Come on, back. Thank you. There, that's it. Okay, where's the tariffs going next? There. China's the warm-up act. China is the warm-up act. Here's how this works. You know the song, The Man Who Broke the Bank at Monte Carlo? No? He is the man who broke the bank at Monte Carlo. So how do you break a bank when you're gambling? Because the bank has more money than you. You double your bet every time. It's called a Nightingale strategy. So long as you keep doubling, statistically on a fair bet, 50-50, eventually it's going to come to you. So long as you have unlimited liquidity, you can just keep doubling until you win. That's how you crush a bank. That's why casinos have table limits, so that you can't do that, which is why the house always wins. Now, let's go to the tariffs. You're China. You're growing really fast. You're stealing everything you can get your hands on, as all developing economies do. The problem is China's really good at it. Now, our films are willing to put up with this because basically we get market access in this enormous growing market. And you know that they're going to be technologically advanced soon, and you want to be part of that party as well, even if they steal all your stuff. So it's a kind of win-lose situation. On a corporate level, you don't mind. But you've got a problem if you're the US. Why does the US grow faster than everybody else? Because its firms have all the tech and all the IP, the intellectual property that protects it. And they control 80% of all the global supply chains and extract 80% of the value from them, which is why they have such high profits on their really big firms. Now, what happens if China catches up by stealing all your IP? Bye-bye. In 5 years, 10 years, that differential's gone. So there's real reasons to actually be concerned about this, because if it's Vietnam stealing your tech, you don't give a shit, they're that size. China's big. Makes a difference, right? So Trump is, if you want to understand Trump, watch 2 seasons of The Apprentice. Like, sit down and watch it, and you're like, got it, I know what this guy is. He likes deals, that's true. He really understands gambling. And the one thing he hates is uncontrolled risk. He likes to take calculated risk. Now, what he's discovered is he has a printing press. And you will say, oh no, it's the Treasury that has the printing press. You go, yeah, Minushkin. And you go, oh, but the Federal Reserve. And what's he been doing? So he gets the interest rates he wants, and he has the liquidity pump for the whole global economy. So he can play nightingales. So he'll do a deal with China, and then he'll double the bet. And he'll do a deal, and he'll get close to double the bet again. And what's he doing? He's waiting to see to when they finally squeal. And when they finally squeal, he'll sign the deal that he wants, and then he'll turn to these guys. Because basically, the real people he cares about, rightly or wrongly, are BMW and Mercedes and Siemens and all the other sort of big firms in Europe. And a lot of this really doesn't make sense economically, but if you're BMW and 40% of all the stuff you sell is sold in the United States, and you know what he's just done to China, you're facing a schoolyard bully with a printing press. Want to bet that every single BMW is going to be made in Alabama or North Carolina? So he made a promise to his base that he would bring those jobs back, and people laughed at him because he's not going to bring those jobs back. He's going to bring somebody else's jobs back. So that's a big mercantilist play, and his next target's Europe. So that's how this plays out. It's not going to stop anytime soon. He's refashioning the global economy. He's taking it away from a multilateralism that's firm-based that benefits American firms as it becomes asymmetric against American firms. And what he did was, and he didn't do this, but what America did was, and as usual they did it without thinking, and it proves to be genius after the fact. When you send all your firms abroad to make their stuff in China, what happens is China builds all the stuff for you. You didn't build that. You just send your IP and your people, and you use local Chinese labor. So you have optionality over that plant and equipment. You can just walk away. You can take it somewhere else and dump it down. Not just a good example of this, Korea, Samsung, right, used to make all the TVs in China. Then they became too expensive. Chinese wages are going up. They took them to India. Boop. And guess what happened? The Indians built the factory for them. So all of the fixed costs are on that side of the supply chain. I don't have to care. We're out of here. Come on, let's go. So what were Trump's tax cuts that all went to corporations? It was a forward payment on that strategy. Here's your payment. It's going to get tough for a while. Deal with it. That's what's coming.
What do you think? Do you have more questions?
Yeah, sure.
All right. Let's do 3 more.
Yes, here.
All right. So in one of the opening slides,
yes.
you included among politicians from the EU, Canada, and the US of A, you included a picture of Jair Bolsonaro. And so what I want to ask you is, how exactly does your analysis that you've laid out here apply to Brazil, a country that was ruled by military dictatorship until 1989, and whose political economy on a whole doesn't really, at least to me, fit into the slick analogy of hardware, software, forensic study, and revisionism?
No, totally fair. So Latin America invented populism. So, you know, in a sense, we're Johnny-come-lately to the whole thing. And as far as Brazil's concerned, Brazil's an interesting country because regardless of the political polarization, the military intervention, the one thing Brazilian elites have always agreed on across the political spectrum is that Brazil is a great country and we get no respect. There's a real feeling that they're like big guys in the room. And they're certainly big in Latin America, but that's not good enough. And if you look at the past decade, the globalization of Brazilian firms like Vale and other big players, they've really made those moves. But at the end of the day, like most of Latin America, it's a bit of a lie, because ultimately they're a commodities producer. And the problem being a commodities producer is when prices go up, you invest more. And when you invest more, you get more capacity, so prices go down, so demand goes up. And that cycle continues until you get to the peak of the cycle when you're at your most vulnerable. And then you've got massive overcapacity, and for some reason they stop buying. And that was the soybean market. And that just went crash. And it's also what did in Venezuela, because what they export is oil. Right? Now, Argentina is slightly different, and that's Peronism, that's real populism from day one, right? What did you have? You had 6 provinces that were run by families that controlled all the natural resources in the country. And then when technology came along in the 1890s and you had refrigerated cargo, suddenly you could do beef farming, and you could have bully beef in the Pampas and open it up, and it became the richest country in the Western world. And then the 1930s happened, and it became very poor very quickly. And then it invented populist policies in reaction to it. Because Argentina's biggest problem is its investor class won't invest in Argentina. They'd rather buy apartments in New York. So they're permanently dependent on foreign direct investment to make up for the shortfall in domestic investment, which means anytime anyone farts in the bathtub, the investor class loses it and evacuates as fast as they can, hence why they go through periodic crises. So Latin America has got a completely different set of dynamics, but what it basically boils down to is you have a very small number of people with all the investable capital and practically all the income, and every now and again they do a deal with the left or the center, and it's a bit of redistribution, and things seem to be going on the up and up, and they get a little bit carried away, and they think the oil price is going to go on forever, or everybody's going to keep buying the soybeans, and then boom, and it goes down, and it polarizes, and they get a nasty reset. And this version of the nasty reset is Jair Bolsonaro. So it does work. Kind of. Anyone else? Or are you all exhausted and want to go drinking? Because that's what I want to do. Yes, last question over here. Could you find a more awkward way to get there? That was
Just one thing. Après Trump? Après Trump?
Après Trump? Okay, so here's how this plays out really long term. And I just spent a day in London doing this kind of scenarios analysis. It's with just me and a whole bunch of people that study populism and big macro stuff. And it was really interesting because we all gave our shtick. And there was somebody there who had, I can't mention the firm, but they basically had what looked like my bathroom tiles, which are sort of chartreuse hexagons, because I like that kind of thing. And they had a whole bunch of hexagons of different colors. And when people were talking, this guy was writing with a marker pen on it. And we're all sitting there going, what's going on? So after 2.5 hours of this, basically we go for coffee, and he comes back and he goes, right, you want to know what I was doing? I said, yeah. Well, anytime somebody made a point about, let's say, global macro, I wrote something down on a chartreuse tile. And when they made a point about culture, I wrote it down on a green chartreuse, a green tile or whatever, right? So it's all different colors. So, and finance was blue, whatever, blah, blah, blah. And then he has a whole wall, and he spends lunchtime putting it together. And then we come back after lunch, and he goes, I think this is your story. And it's brilliant, because you can start on any theme, finance, and end up there. You can start on culture and end up there. I've never seen this done. It was fascinating. And with a few minor tweaks, everyone in the room went, yeah, that's pretty much the story as a whole. I've never seen it before. It's kind of awesome. So they said, all right, so what happens next? So they split us into teams and said, with that, how do you know what happens next? So this is where climate change comes in. Nobody knows the future, except for the things that we know will definitely happen. Death and taxes. Or more precisely, climate change will happen. Interest rates will stay low. There will be no inflation. People will still have very high debt loads. Automation is probably not going to be nearly as important as people say, because it's really just investors selling you crap and making you scared, right? So we go through this sort of stuff and plug in the stuff that we've got, and all of the teams come back with exactly the same conclusions. So here's how it works. Right-wing populism of the nationalist variety, which is exclusionary and basically politicized immigrant labor, will win lots of elections but will solve no problems. As climate change and other things become more and more pressing, you will move to a kind of AOC, Green New Deal, and lots of different versions. If that moves extremely rapidly and satisfies the wage demands and life expectancies of the people who vote for it, it will be valorized, and you will get a structural left populism. If it fails to do so, if it doesn't work as advertised, if there's corruption, if people lose faith, it will swing back to the right. But you will do so under ever worsening climate conditions. So their life cycle gets shorter every time it gets it. So you get this reversion. You start off with the Trump version, you will get an AOC version. Then it will go kind of Trump, then it will go more AOC, and it will go kind of Trump, and then it will lock or we die. And that's what we came up with. But don't worry, we'll all be dead by that point through natural causes. So it's fine. I mean, I have a 7-year-old. I look at her and just go, either the next generation gets it right, or I'll be dead before you. So it's fine. Thank you very much.